Hi guys, and welcome to my very first YouTube video. I've just created this channel really to express my opinion on a few companies I like, a few companies I don't like, probably a few ETFs. I do apologise in advance because I'm not an editing wizard, so I'm not sure how this video is going to sound, look or come out because I've not really got the equipment yet, but let's get into it. So we are going to start off with Inmode, ticker symbol INMD, and this is a company I think has tremendous growth. I'm guessing if you're watching this video you probably know a little bit about them, but what they do is they design, develop, manufacture and market minimally invasive cosmetic products. So you can see on the right hand side of the page here is a portfolio of the aesthetic technologies that Inmode design, create and market around the world. So at the end of this video I am actually going to show some clips from Inmode which do show these in operation, so you can really understand the product which Inmode do sell. So moving on now, we're going to have a look at Inmode's global operations. So you can see they are headquartered there in Israel. As I mentioned at the start of the video, they are an Israeli company that's listed on the Nasdaq. And you can see everywhere on the map that is filled in green is where Inmode have direct operations. You can see that they have regional offices in LA, Toronto, the United Kingdom, Spain, France, Beijing, Hong Kong and Sydney. And you can see from the map as well, everywhere in blue is where they have indirect operations, where they're not selling directly and they're selling indirectly. But as you may have noticed, China is a bit of an exception. So China at the moment is an indirect operation, but they do anticipate it in the near future that they will be moving into China directly, and that is something that we are going to pick up on later in the video. If we take a look at the top of the screen, we can see that globally they have 300 employees and 158 direct sales reps. I can tell you from my research I found that number is only increasing, and that Inmode have actually been extremely aggressive during the pandemic. They've been headhunting direct sales representatives from rivals, and they've been looking to bolster to that team and add expertise so they can really enter these new markets and gain an even more dominant position in the marketplace. So let's move on now to look at some numbers. We can see over here on the left hand side, taken from Yahoo Finance, that Inmode were absolutely smashing estimates before the pandemic. They beat earnings in Q3 and Q4 of 2019, and they just missed out on Q1 earnings. As you know, obviously Inmode had to really scale down their operations, and in Q2 it's a pretty bleak outlook. They're not really expected to make any money. They're actually expected, I think, to make a minor loss, but as we move on you'll understand why that isn't too much of an issue. But also, if we look back at the financials here, down at the bottom left hand side of the screen, we can see that Inmode's revenue growth is exponentially growing. It's double digit revenue growth. It is slightly slowing in recent years, but they are also increasing that bottom line quite significantly. So revenue and earnings growth potential in this company, especially as they move into new markets, I see it as a fantastic opportunity. It's one that you don't really see very often, trading at the price that Inmode is trading at, but we'll also touch on that later on. But yeah, the revenues growth and the earnings growth is fantastic for me. As you can see here, looking on the right hand side, that in Q1 revenue growth year over year was 32%. And that includes March, when they actually had to slow down their operations due to the pandemic that's going on. And now one of my favourite things about this company, one of the reasons why I really looked into it, is the gross margin. The margin on the profits is absolutely unreal. As you can see in Q1 they had a gross profit margin of 85%. That is crazy when you think about the size of the company, the revenue growth, the earnings growth it comes from this. It's an 85% margin, and that is huge. They are selling in 53 countries, as we mentioned before. There's 158 sales reps, and that number's increasing. And a key aspect to the business is obviously protecting the products. So they do have 5 patented technologies across the 8 product families. And the final thing I want to touch on here is in Q1 they did have 5,300 units installed, and that was 3,000 in the US. So obviously 2,300 came from the global operations, once again proving that they are expanding outside the US market. And now moving on once again, So here we have the treatment gap, and this is what Inmode have identified as their segment of the market, and it really positions themselves between people aged 35 to 60 years old. So it's going for people who don't want to undergo plastic surgery, or they can get the same results or similar results without having to undergo plastic surgery and undergo laser treatments. So as you can see, with plastic surgery, 2.5 million procedures are done annually. Full surgical procedures with general anaesthetic, and they have one of the key things that Inmode has going for it is that with their treatments you can be in and out within a day, and the comparable downtime in recovery time is extremely short compared to plastic surgery. And as you can see on the left hand side with the laser procedures, there's 40 million procedures annually that are undertaken, and Inmode think that they can get a piece of this pie, so they'll be looking to develop products that can really tap into both of these markets, the laser market, the surgery market, but in a minimally invasive way, which moving forward is probably going to be the way that people want to receive their procedures, because who wants a long downtime, potential scarring for the rest of your life, when you can really be in and out with minimal scarring for the same results really. And now the solution to the treatment gap. Inmode is all about innovation, and they are currently at a paradigm shift, so they are looking to level up the generations and really progress quite rapidly, and they are positioned really well in the market to take advantage of this, especially with the amount of cash and the amount of research that they can put into this. As we're going to see on the next slide, we're going to take a quick look at the balance sheet. Now, this balance sheet, the balance sheet for this company is phenomenal. You have to remember, they have a market cap of around $1 billion. I think it's actually down to close to $800 million at the moment. But when I first started looking at the company, the market cap was around the $1 billion mark. Which now, if you have a look at their assets, they've been increasing their assets year over year. So we can see in 2017, the assets increased from around $39 million to $81 million in 2018, and that's resoundingly increased now to $218 million in 2019. You can just really see how here, year after year, everything's increasing on the balance sheet, everything's getting bigger, everything's more profitable. Capital is being retained within the business. As you can see, the net tangible assets year over year is increasing phenomenally as well, from 19 million to 43 million, up to 176 million in the latest calendar year. The working capital is increasing, the invested capital is increasing, tangible book value was obviously also increasing, but another great thing I like about this company is there is little to no debt. So 2017 no debt, 2018 no debt, 2019 they've taken on a little bit. But when you compare this to the assets that they are retaining within the business and increasing, then it's absolutely crazy. This is a balance sheet which I think is absolutely phenomenal. It's one you don't come across very often, especially in a company that's not really being picked up by the mainstream media. So this is a great opportunity to me. And one final point before we move on to the cash flow statement is the number of shares in issue. It's clear to see that they're not diluting the shareholders. It has slightly increased over the last 3 years, but they're not issuing new shares. So it's not something that I'm worried about them having to raise money, because they don't have to raise money. When they actually did IPO, most of that money that they IPO'd just went straight into the cash account. They don't really need cash, so you don't really need to worry about being diluted as a shareholder, which is something within companies. It's a major red flag when they are constantly issuing new shares, trying to raise capital and diluting their existing shareholders. And now to the cash flow statement, and things just seem to get better and better for this company. As you can see from their operating activities, it's increasing year over year quite exponentially. Everything's increasing. The net cash that they're retaining is increasing. It's increased from $10 million in 2017 to the trailing year to date it is $26 million, and of the calendar year 2020 it was $20 million. The cash at the beginning of the period, once again, it's increasing every year quite exponentially. The cash at the end of the period, once again, it's the same correlation, it's the same trend, increasing the cash flow, increasing the profits, increasing the revenue. Everything's going in the right direction for this company. You can see the free cash flow, once again, in 3 years it has almost quadrupled. I think it has quadrupled actually, so it's just really, this company is, it's wow. When I look at the balance sheet and the cash flow statement, the free cash flow, as you can see, it's just phenomenal really. Alrighty then, let's move on to the recent developments regarding Inmode. So as I mentioned at the start of the video, Inmode's not really being picked up by the mainstream media yet. I think CNBC have spoken about once or twice on Mad Money maybe. But as we can see on the right hand side here, some hedge funds have started to get into Inmode. So it's started with around 7, just after it IPO'd towards the end of 2019, mid 2019, to now, as of Q1 2020, it's in around 11 hedge funds. So if that trend continues, it's obviously good for the stock as there'll be more buyers. Hopefully we'll see some capital appreciation of the shares, but it does show that it's starting to gain some traction now, within some people who have the smart money in the market. But a major development, as mentioned earlier, Inmode said they were confident in gaining direct exposure to the Chinese market, and recently they have had NMPA approval of 2 of their products in China that they are now allowed to directly sell in China. So this is massive for the company moving forwards, to increase their revenue, increase their earnings. So they're now going to be able to really ramp up that presence in the region. And they have also received health certification in Canada, which just goes to show that they are, looking to move into all markets and really solidify the position and increase revenues, increase earnings, and that's what you want from the company. And now on to what the analysts think. So let's take a look. As you can see, we have a number of analysts here thinking positively of the stock. So we have some strong buy recommendations, some buy recommendations. As you can see, the recent upgrades and downgrades, they're all have recently been upgraded to buys, or overweight, which is another way to buy. So that's really positive, really, for the outlook of the company. You can see the 5-star caps rating. You can also see the valuation here from Simply Wall Street. Now, I can tell you, when I did first look at this company, it was fair valued to undervalued, but obviously when you take into account Q1 earnings, the valuation that they use for this is going to be pretty skewed, because they did miss earnings, and earnings were, down due to the pandemic, and I would imagine that their Q2 earnings are going to also be absolutely probably diabolical, as they probably won't really recover earnings-wise towards the end of the year, although they are still predicted to make more this money year over year than they did in 2019, which would be crazy considering everything that's gone on. We can see the analysts' thoughts on the company's future growth. So the revenue growth is expected to increase far greater than the industry and the market in general. They're expected to grow revenues at 17% a year, just over. But when you look at the earnings for the company are expected to grow just below the industry average of 26. What's expected? The company's expected to grow at 23%, opposed to the market's 22.8. I would probably attribute this to the company spending a lot of money on research and development. So the more money that goes into that, the more money that's taken off the earnings as they expand into different countries. Try to develop new products and market new products internationally. So in the short term, earnings probably might take a little bit of a dip, but in the long term, earnings 23% growth is still great, and 17% revenue growth is also great. So the future for the company obviously looks very bright. And now we're moving towards the close of the video, so I'm going to have a look at the current share price and give my thoughts on it. So as you can see here, year to date, it is actually up more than double since I think the IPO, since it was brought onto the market around $14. Current share price is at $25. So you can see there was a large increase towards December, and then obviously in the wake of the pandemic that's going on at the moment, it has been shattered, going right back down to around $16. I think it dropped to during the crash. It's now recovered to around 25. Has been trading in that sort of channel of sort of 25 to 35 since the crash. I think it's really been suppressed by the fact that we don't know when things are going to return to normal, so we don't know when people are going to be able to have these procedures which Inmode sell products to service, really. Could be pretty bleak outlook maybe for the year for the company, which is why I would think the share price has not recovered, as you have seen with the market in general. But to me, that does offer a great opportunity, sort of to be looking at the stock to get in whilst it's still suppressed, because once it breaks out, it breaks out. And one final point I want to make here, which brings me on nicely to my next slide when I look at the downsides, is that the procedures that are undertaken with Inmode's devices are not critical, they're not life-saving procedures, they're not procedures which people have to undergo. So if anybody's booked on or thinking about it, it's not like they've broken a leg and they need to go in and have surgery within the next week or within the very near future. They're all procedures that can be delayed indefinitely, or they can be delayed for a period of time. So that's something to bear in mind, which is probably why the share price has also not recovered, because there could be a demand drop off, maybe for the rest of the year, maybe for a year, who knows. But it is worth bearing in mind that. So some of the other downsides are, obviously carrying on from that point, is we don't know when things are going to return to normal, so we don't know when demand is going to pick up. The revenue growth, although it is still high double digits, 32%, which was great for Q1, the revenue growth before that had been slightly decreasing, so it's still a phenomenal rate of growth, but it was slowing, but it's looking like it could be on the increase again. And that since the IPO in August 2019, even after the market crash, the share price is still almost double what it was at IPO. So a lot of companies have a nice run after the IPO and then they falter off and they don't really recover. With Inmode, I do see them as a company that's going to break out again, and it's just worth bearing in mind that it is a new company on the exchanges. And finally, due to the nature of the products they sell, they are quite open to lawsuits, especially when they aren't providing the procedures themselves. They're selling these to physicians and to clinics globally. So once it's sold, their name is on the product. The physicians or the clinics are going out and doing the procedures. If they do it wrong, if they've not been trained properly or they've misused the product, then although it's not Inmode that has done the procedure, it's the Inmode product that's going to get blamed, and they do leave, that is probably moving forwards, they're going to face lawsuits. They have faced a few when I've looked at into the company. It's just something to bear in mind. They're going to have to increase the spending on legal fees, settlements, and just really making sure that the products are used correctly and that physicians have the access to training when needed. So now we're going to take a look at my position with Inmode, where it is in my portfolio, the price I managed to get in at. So as you can see here, my average price is around the $28 mark. I think it's at $28, $29. Current share price is at 25, so I am at a loss on this account with Inmode, but that's not an issue to me. It's actually, I see it as quite beneficial. I do want Inmode to be my highest, I want it to be in my top 3 holdings at any one time. So I'm quite happy and quite comfortable with it being my highest holding at the moment, with 10% of my portfolio, 10.44%. And I really see this as an opportunity. I didn't really find or discover Inmode until after the market crash. Otherwise, I would have been looking to load up on shares down the $14 mark. I'm really hoping that it does retrace sort of lower than where it is now, so we'll be looking to buy in heavily if it does. If not, I'm happy buying at this price, especially as a lot of the other companies in my portfolio have really skyrocketed. They've really recovered since the crash, so it's really hard to buy into them whilst they're at, touching all-time highs, or they're very close to it. So any positions within my portfolio that haven't recovered yet, they've took a bit of a battering and they've not bounced like the market has, I'm looking to add, especially with a company like Inmode. They're not taking on any debt, they've got great balance sheet, great cash flow, great business model, and it's probably my most bullish stock, which isn't, mainstream media. It's not, you see the Teslas flying, you see Facebook flying, you see all the big tech stocks flying. Inmode for me is one that I think over the next 3 to 5 years, that share price is going to increase dramatically. So as long as it's around this price, I'm happy to buy in and build my position even bigger. I probably don't want it to go above 15% of my portfolio, but in the short term I don't really mind. I did kind of want it to be around 10%, but if prices stay low, then I'll be looking to build it up, and then if we see another market correction, that's when I'll buy into the other positions in my portfolio, or once markets stabilise, I'll be happy to buy into all positions. So we're just going to move on now finally to show you a few videos which I said I would show you at the start of the video, just really showing what Inmode does, the products and how the procedures take place. So I may talk you through a few of these, but if you'd like to leave a comment on what your thoughts are on Inmode, how I can improve these videos as it's my first one. I know that the audio and the visuals are probably not great, but hopefully over time we can solve that and I can improve. Thank you. I'll leave you with the videos. So, what we can see here is this goes under the skin, and this is one of Inmode's radio frequency treatments. So what this does is it's a small incision that's made and it's placed under the skin, and what that does is it heats the subdermal layer deep under the skin, and that shrinks, melts away the fat, which then provides a thermal look to the surface area. So you can see here's where the incisions are made, and here is an animation of what it looks like. Inmode do provide images of this actually happening in person, but I didn't want to put this on YouTube as it's quite graphic. I didn't think it would be appreciated. But as you can see here, it just goes under the skin, and it's worked around the face, the neck, the chin. And here are some of the results you can see as the animation, and here you can see some results in person, and that's quite striking. When you think there's no surgery there, there's no cuts, there's no incisions, that is phenomenal in my opinion. What do you guys think? So yeah, thanks once again, guys. If you want to leave a comment what you think of this, and let me know, I will try and do some more videos on some other stocks or ETFs that I hold in my portfolio, and I'll look to keep you guys updated, and we'll take it from there. Thank you.